Hello, fellow traders. Hopefully, I'm getting audio. I'm not getting a readout on the mixer, but I'm going to try to give a quick record here and show you guys kind of where we are in the situation. And it's actually kind of a very advantageous situation for the sake of this video because it'll allow me to really kind of explain how this is an advantage and not a disadvantage or complete catastrophe. Because I know a lot of people will see this type of setup or see these positions in drawdown, and understanding that the account is at a fairly low balance. We're at probably a 10%, a little over 10% drawdown for what we have. But I'm not really looking at the percentages. I'm looking at the dollars in terms of margin available that I can use, planned ahead for what I'm going to put in, and the drawdown. And as long as all that fits in the balance, that works for me. So that's kind of what I have set up. I've got the current risk now at 0.01 lot, or 1,000 units per $133 of an account. So it kind of gives a little bit less hair raising than having a 1,000 unit or 0.01 lot per 100, because with a lower leverage, that can tend to get fairly tight. So by using a little bit higher rule of thumb with the Euro USD, it tends to work out a bit more comfortably. So right now I'm in a pretty good spot. I'm not disappointed at all. Actually I'm rather excited because we have so many different options from this type of setup. So before we get into what I'm going to show you guys here, I'm going to just want to say thank you for all the support recently. Let's keep that going. Make sure you leave a like. If you're not subscribed already, go ahead and subscribe, because I'm going to continue posting live trades and show kind of a walkthrough of this process here. And for those of you that are following me and still have a little bit of confusion as about what all I keep talking about on some things, I'm going to try to clarify those in this video. So one thing that we have to keep in mind is that everything is a tool. So once we have our initial position, we have a trade. Everything after it is a tool. So the worse this gets, actually the better it is for the outcome. And once we start utilizing other tools, such as other positions or other techniques, which we're going to get into a little bit here, you can actually create more and more advantage for a much stronger outcome. So basically, the more we get it wrong, the better off we're going to be in the end for, having a higher return for a slight, better risk management model. So let's say, for example, I know what we talked about in the last trade video where the series started. We got it right here, and should it get right here, we're going to look to take it up here. But if we go wrong, I had marked out this little line here because I'm kind of looking at it in terms of levels, which is where I went ahead and set that in place. I probably would have been better off to go here, but if we try to go and take an entry here at this level, we're not going to be very far apart from where we already got that entry. So if price should continue lower, we're going to actually drive our drawdown up exponentially. So that's why I'm kind of holding out on this third entry. Try to see if we can get somewhere in this range before we try to put one on. I'm going to try to look for price to do something similar to that, kind of show some signs of slowing down at least. Because it still looks like it wants to push down. Now, we just had FOMC, and it didn't really make much of an impact. The news is coming in as unchanged for the GDP growth and a few other things. So the real news is going to be the interest rate. But let's say, for example, that interest rate comes in and it drives price even lower. Well, what we have in terms of setup, I've got these separated. So if we should happen to come back down and get here, then right now the whole purpose of what we're trying to do is manage that break-even point. So if price were to come And let me get a measurement tool. It might be a little easier to kind of show this in terms of what's happening. So we've got a 60 pip separation between those entries. And right now we're pretty close to where we can add in again. We're a little bit lower. If we're on the level, we're looking at about 50 pips or so. But I'm actually going to be looking to go a little bit further before I hit a third entry. And what that's going to do is actually put our break-even point right around here, below these two positions. So even though we are wrong here on this position, and we come way down here, yes, we'll have some drawdown between both positions, but we have room in our account for that. And our NAV, we're only using a 131 for the margin, and it'll add about another $70, so we'll be at $200 margin. So 50% of the account will be in margin if we enter a position here. So our drawdown at that point, though, will be probably at about $80 or so. So that means we still have $120 left for it to go even more wrong. Now, if it does continue to go even more wrong, it could do that, but we look at all of this as a potential area for a retrace, and it's usually very likely it could retrace at least half the way. We've also got a resistance level around here, so if we come down here, I could always lower this target, and that'll still make us some money because this will all be a profitable part of the overall setup of trades by using our tools and mechanics of the way those tools work. So that's one option that we're going to have. Now, let's say, for example, we come down here, trigger this entry, come back up, and start stalling around here. Well, we would have a position. Let me get a paintbrush. See if I can find that rather quickly. Probably, there it is, right in front of my face. So we would have a position here. Our break even would be here for all of the positions. But if we go and consider these positions as I laid out in probably the third video I made in regards to hedge structures, we can actually use that as a tool to manage our drawdown and risk and maintain control of our account without just letting it run and blow out. We have this position here that we could use, plus the position here. The break-even point between those would be about here. So if price were to be stalling here, we have not one but two options in this point in order to determine what we may want to do. So I always refer to educated guessing. So right now I'm kind of looking at price as an overall. We just consolidated up top. If we're going to retrace, we're going to retrace to around here or here. So that's what I'm looking at currently as my educated guess. So that's why I have the setup. But if price starts to stall out around here and start to drop again, we could close this position by itself, let the third entry go much lower, or we could close both of these together at even or at slight profit, and then we only have this one bit of risk here. We free up all of our margin other than about $70, and we release the pressure on the drawdown to continue waiting for this to come down. Then let's say we take the option where we closed out this position and this position, but this position was left on, and we enter another position here. Well, now half the distance between these two would be about here, which, if it continues to pull down, is a very likely place for it to retrace yet again. So we have so many different options here that we could take. And let's say, for example, what right now I'm planning to do, if price goes and let me remove some of the mess from the chart here real quick to kind of show you which option I want to utilize first. And I'm going to plan for price to come down. If it does, if it holds this level here and just goes up, that's fine. I'm going to leave these two together and just let it ride to target. If this one comes in and gets into play, then I'm going to try to at least hold to here until it gets back to the first position. It doesn't have to go to target at this point, and that would still be roughly about $80 worth of profit at that point, even though that first one was wrong and the second one's not great in that type of position. But we would also have the option to continue holding for further, which would result in probably about close to $120 to $140 in profit in this account. So you can see there's a significant potential for gain, even though we're hardly looking at much of a drawdown. So this is how we can actually pull out a benefit from being wrong. We don't want to always be right, because if we're wrong, the drawdown is small compared to the size we can accumulate. And then once we get down here, I'll have 9,003 because I'm going to have to set up an actual buy of 3,002 in order to avoid the first in, first out rule. Because this is a U.S. regulated account, if I put in a 3,001 or 3,000, it will combine the two positions. And then even though it will look combined on the chart, there will still be separate orders in the order book. So what would happen with the FIFO rule, first in, first out, whatever I do to sell or close would come from this position first before it came from this position. So that's why I want to use units in this instead of lots, because it's a smaller account. And I can use that little difference in units to avoid worrying about the first in, first out rule. So that's why you see set up like this, and why these positions have X's on them. I can run them independently because they do not classify as same size trades. So first in, first out does not apply. So that's one way to work around it in a US based account. But, you know, I mean, you can see, no matter how bad this may look to the untrained eye, there are several opportunities, ways, and tools. So as long as you understand, you know, all the different techniques I've shown, all the different videos that I've shown, don't look at those as individual strategies or all-inclusive as just one thing. Because, I mean, if we could just say, do this one thing, we could write a bot for it, we could write a computer program, walk away, and never lose sleep again. Unfortunately, as you've probably found out, these things don't exist. It's a pipe dream. Because ultimately, you have to adapt and use your tools. The market is always different. The market is always changing. So how can we lock it to one set rule or particular strategy? This isn't really a strategy. The whole idea is just to simply stab one in, be a part of the market. I mean, at the end of the day, I'm being paid just for being involved. That's it. I mean, that's what it works out to. Time and mechanics of the tools that I'm utilizing, the way I'm structuring my positions, the way I'm managing the risk, the way I'm looking at the overall picture of the swings and the moves. I'm planned out to give price plenty of room to move. So, I mean, there's so many different things we could do. If it's going to continue going down, that just means we would have to utilize our options, utilize our structures, and kind of plan for what we're looking at. And because we've been coming down for so long, we already know the market doesn't go in a straight line forever. It does not go on forever. Even though we had a massive change right here from here to here, that is 400 pips. It took a while to do that, but it didn't keep going forever. It came back. How much? Almost 50%. And now we're below the 50%. The market is always going up and down. We're just using a wide net to catch all of these swings, and whenever it's to our benefit, we close it out and have a nice little happy, day. If it goes wrong, fine. That just means we have more options, which gives us more opportunity to turn out in the positive. Just like with setting up with the most recent videos where I'm showing you where it's management only. It's strictly doing it this way. You can utilize the way we work a hedge. You can also do certain things, like if we were to hedge and hedge out certain positions, I would, in a US based account, just open a second account and move funds between the two, but count both accounts as one in total. And as long as I can cover the margin and drawdown in one account, whatever's left can be in the other account to work the other side. And we could actually do something where we use a little bit more of an advanced position. So like if, for example, we wanted to hedge up this 3,000, with a 3,000 we could put on a 6,000 short, and it's the same as having a 3,000 position long, and we can have the drawdown mitigated, or stopped rather, and stop the bleeding, as I've normally said in the past. And we can manage just the buy side or we can manage just the sell side, while the buy side is on hold. And this is where hedging would possibly have its place, because we're not going to realize an $80 loss. I'm just going to stop the bleeding, put a band-aid on it, walk away for a minute, and once the short side does really start to show some relief, either by going flat and sideways, similar to like this is one of the strongest indications we're probably about to turn around, when you start having a lot of flat and sideways action in the price. So once we start seeing that, then we can end our focus on the short if we're hedging, and go back to working the long, and the balances will be no worse for wear, yet we could actually get a stronger advantage to taking care of these ugly positions. So I mean, just in this video alone, and just in this short bit, I haven't really been going but about 15 minutes, but it's just been non-stop, option after option after option. There's no excuse for losing. There's no excuse for constantly going red. There's no excuse. None. It is very simple mechanics and time. Utilize your tools. Understand how they work. Understand each technique, because every technique will have a strength and weakness. And once you are presented with a situation that the strength of that technique becomes beneficial, that's when you utilize it. Even different positions are tools. This is not a combined net position, but I am treating it as a combined net position, if I can help it, to try to catch a very wide reversal area. I'm trying to catch a reversal anywhere in this area. Anywhere in this area. That is a 225 pip range. Trying to catch a reversal and trying to come back to catch it to there. And if we get it to there, look at how wide that range is, that we have an opportunity to just catch a straight 1, 2, or 3 entry profit. That is the simplest way to work it, and that is ultimately the starting plan. But if things do not go according to plan, because of course we all know the best laid plans, I'm not sure exactly what the saying is, but I'm sure we've all heard it. The best laid plans, can always go bad. So at the end of the day, as long as you've got more than one option to fix it, you have more than one tool or technique or understanding of mechanics that you can use to fix this, all is well, and there is no reason to just give your money away. So that's where we're standing. That's where we're sitting. Either way you want to look at it. It doesn't look like FOMC moved it very much. So we're going to be waiting on these interest rates and the sentiment panel and the PPI. PPI doesn't really do too much, but sentiment panel and of course the interest rates, especially if the US Fed changes their mind or changes their direction, can cause a significant move. So right now we're kind of working with this little range here. Let's see if I can, where did my little thing go here? So we're working somewhere, I would say this is going to be probably our range until we get there. We're going to stay between these two levels that we have worked out here. Probably going to dip maybe just a little bit lower, but we're going to be working probably around in that range until the interest rate. So no real worries. I'm not going to worry about putting a limit order on, but if you're following the series and have your own account going to try to follow along, just know that I'm probably going to add, but I want to see some sort of stoppage, something like this or like this, where the candles and the price just kind of slows down its movement. I don't want to see it jumping or bouncing. I may potentially still just go ahead and put on a limit, but more than likely, I may be looking to add in somewhere in here. So if we get a pin bar or something like that, I'm going to wait until price tries to get back near the pin bar and add in or something like that. So worst case scenario, we can always just stab one in here if price is breaking over and coming back up. So we'll just kind of take a look at what's happening. If we're definitely getting some stops like this, then I'm just going to try to catch an entry somewhere here. But if it comes down and floats around, I'll stick one on here, and then we'll be looking at those plans and further options. So still plenty of room to work, plenty of room to go. So let's just work on it and give it some time and let it work for us. We do not need to lose sleep and stress and hit this chart constantly. It will do it for us. Just let it take care of itself. So until we have some other kind of movement or something else to do, I will see you guys in the next video.